and welcome to BNSN, our weekend right here on ET Now. And volatility has spiked the index and how this week. But this show is about you, so we'll be talking about lots of stock queries. First up, we'll be discussing the Tata Motors DVR. Also get inquiries coming in on LIC Housing Finance. Not just that, Sujata's portfolio, that's what we'll be discussing today on the show. Time to bring on board our experts. G. Chokalingam, founder Economics Research and Advisory, joins in on the fundamentals, and on the technicals, we have with us Ruchit Jain, who's technical analyst at equities at Angel Broking. Thanks so much, gentlemen, for joining in. First up, we've got a query from Sita Lakshmi on Tata Motors DVR, an email query that has been sent in to us. So let's take it right on board. Well, she's got 139 shares. She's bought of Tata Motors DVR at an average price of 357 rupees a piece. With the time horizon of the next 6 months, she wants to know what to do with this. And let's get started off then by just mapping the charts over the long term and see how Tata Motors DVR has fared. Her buy price is fairly high and the stock has declined since then to 297. The last 1 month may have seen a gain, but reflection of the longer term charts will definitely show that there has been a little bit of weakness. Perhaps the 6 month or 1 year chart will show you that in the last 1 year, it's been absolutely meager, a return of just about 2.9%. There's been a lot of hope pinned on the Tata Motors DVR as a whole, Mr. Chokalingam. But given her hefty buy price, is this a keeper in the portfolio? What would you advise?
I would still suggest sell and buy Maruti Suzuki. Both tactically and also in terms of economic fundamentals. Tactically, Maruti has fallen a lot from its 52-week peak, whereas Tata Motor, from the 52-week bottom, has already moved up almost 50%. And generally, to some extent, DVR also follows that. Now, Tata Motor, I have my own doubt on JLR margin. We had seen some pressure in China. Going ahead, I see pressure coming from both US and UK, because both these economies now recently reported anywhere from 0.4 to 0.5% GDP growth. So the slowdown in the economy of UK and USA definitely will apply more pressure on the margin for JLR business. Therefore, I would suggest this switch.
Okay. A preferred option would definitely be in the auto space, and Mr. Chokalingam is pretty upbeat instead on Maruti. But let's take a call then on the technicals as well. And given the kind of chart pattern we've witnessed, Ruchit, do you think that holding on to Tata Motors is a prudent strategy, or would you perhaps also have another recommendation that our investor can look to put money into?
Overall, although the short-term trend has been positive since last 2 months, the stock has moved higher from its low of 220 to about almost above 300 levels. But if we observe a bit longer-term charts, then weekly charts are indicating that now the stock is trading around its crucial resistance level. The stock had corrected from its all-time high of 380 to 200 in 2015. An exact 61.8% retracement of that is coming around 305, 310 zone. So technically, whenever such pullback moves are there, 61.8% retracement level tends to act as a crucial resistance, and that's where the stock is trading now. So that's why I think one corrective action would come in the stock, although I'm not expecting that it would resume its downtrend and go much lower or up to the lower levels again of 200, 220. But definitely some about 8 to 10% correction I'm expecting in the stock from current levels. So my advice would be to exit from the stock at current levels. It's quite possible the stock would correct to 272, which has now become a support base. So 272 would be the ideal levels, I think, on correction to go again long on the stock.
Okay, that's the call coming in on some important technical levels as well to map out on the Tata Motors DVR, and Ruchit's advice as well on the technical side is in fact that you could exit at the current levels. I hope you took note of that advice. Let's shift gears, chat about our next query for the day as well, and this one coming in on LIC Housing Finance. In fact, let's take a look at the query that's come in at hand. Akash Bhatt has sent it to us. He's from Mumbai. He's employed. Now, he's got 20 shares of LIC Housing Finance. His buy price, 485 rupees per share. The question is, should he hold, sell or buy more? It's a fairly long-term time horizon of the next 2 years. So 485 is his buy price. Let's check in on what LIC Housing Finance has been up to of late within the housing finance space. This emerges as one of the favorites. 462 is where the stock is currently perched at. What is the call, Mr. Chokkalingam, on LIC Housing Finance? How exactly would you look at this, positioning it versus some of the other peers within the space?
No, the investor being long-term investor, I would suggest hold. If there is any marginal correction also, I would suggest accumulate. Because despite economy going through tough time in the last 2-3 years, LIC Housing has maintained a significant growth on both top line and also bottom line. Its disbursement also is growing very decently. So therefore, I would suggest accumulate on declines.
Okay, that's the word of advice coming in. Accumulate on declines. Let's just take a quick look as to what the earnings have been as well for the fourth quarter for LIC Housing Finance. Profits have been impressive at 448. Stable quarters, perhaps how you could describe it. The net interest income also at a steady 26% higher to 821 crore rupees. What would be your advice, Ruchit? Is a good time to buy LIC Housing Finance now? Do you think that our investors should stay put when it comes to this call?
Overall, the stock has been consolidating in a range. Since last 1 year, the stock has not shown any major momentum either on the downside nor on the upside. So probably from 380, 390 to 500 has been the range, and it's good that the price has shown a time-wise sideways correction rather than a price correction. We have seen recently in last 1 year when markets have corrected, stocks have shown much higher price correction. But it's good that it has been showing time correction. Once this time correction is over, the stock would resume its previous uptrend, and I think would move much above 500 levels, which were the recent highs. So it would be advisable to continue to holding the stock. Major support on the long-term charts is now coming around 425, I think, which has become a base for the stock. So any declines in next 1 month or 2 months, if the stock comes around 425, it would be a good opportunity to accumulate and again add the stock to the portfolio.
Okay, that's the call coming in. So you can look to hold on at the current levels as well as add on some more. LIC Housing Finance on the fundamentals as well as on the technicals is a big thumbs up. Let's slip into a quick break, but on the other side, we've got Sujata's portfolio. We'll be discussing that in our Portfolio Advisor segment. Don't go anywhere. Welcome back to the show. Now, as promised, we're taking on board our Portfolio Advisor segment. So let's get straight to it. Well, today up for discussion, we've got Sujata S's portfolio. Let's walk you through her profile. She's got 12 stocks. She's 40 years old. She's a housewife and she lives in Vijayawada. It's a time horizon very long of the next 10 to 15 years. So let's walk you through the stocks. Start with the banking names. SBI at 221, Axis Bank. It's bought at a level of close to 450, and Yes Bank also features on the list. There's close to 100 shares at 700 rupees. MCX, she's got 100 shares at 800 bucks. L&T Finance Holdings, a whopping 1,000 shares bought at 62 rupees. L&T also features on the list, 100 shares at about 1,200 bucks. Reliance Industries, 100 shares bought at a level of about 940. There's MRF as well, 5 shares picked up at 32,220. Moving on to Glenmark, 150 shares. She's bought that at a level of 588. Power Grid features on the list at 96 bucks. There's also Sterlite Technologies, close to 1,000 shares at 60 rupees. First Source, 2,500 shares bought at 32 rupees. She also says the cash balance available is close to 3 lakh rupees. And the question that Sujata has is to consider the overall portfolio up for analysis. Okay, so let's help her out. And I'd reckon, Mr. Chokkalingam, that it's a well-diversified portfolio. It's, stocks that have from the mid-cap as well as from the large-cap space that have good fundamentals and that are pretty robust in nature by way of the kind of financials that they've delivered as well. Let's start with the banks then. SBI, Axis Bank and Yes Bank. What is your advice?
Yeah, just before talking about individual stock, few words about the portfolio.
Yeah.
It's well diversified, but unfortunately, she has given 46% of the total portfolio to banking and financial services companies. So, which is quite risky. She would have gone through a lot of stress about 2 months back when the entire financial pack cracked in a big way. And secondly, individual stock concentration also too high. Just SBI and Axis Bank alone have about 36%, each 18% exposure. Normally, the retail investor should not go beyond 5 to 10% per stock. So these are my two major observations. She can correct in future. And as far as individual stocks are concerned, State Bank, I am not too bullish in the long term. In the long term, only the private sector banks make a lot of wealth. But however, in the short term, she can hold. I am sure with the March quarter, the pain for the PSU banks should start receding, and the SBI should also start improving well post March results. Axis Bank, I am very bullish on the bank. It's still maintaining a net NPA, gross NPA less than 1%, and I am sure this bank can create a lot of wealth in the next 1 to 2 years. Yes Bank is another great bank, no doubt at all. But in her portfolio, as I mentioned earlier, she has got 46% weight to the banking and financial. Therefore, I would suggest sell Yes Bank and buy Britannia so that the portfolio gets more diversification. Britannia, according to me, is one of the best FMCG stocks. It has corrected a little more than 15% from the peak, and the companies continue to grow its top line and profits, in a strong double digit, which would continue on for March quarter. Therefore, I would suggest sell Yes Bank and buy Britannia.
Okay, that's the call coming in on the overall portfolio as well as some chops and changes. Let's move over to the mid caps then. MCX at 806. L&T Finance, what's the advice here? And given the way the on-ground situation is in the capital goods space, what would you tell her to do with L&T?
Yeah, MCX, in fact, even we have officially buy call. We have been buying aggressively even today. This is, according to me, is one of the great stocks because it's a monopoly in commodity exchange. All over the world, if you see, the commodity business always remained as a consistently growing business. And like LME for London, MCX is for India. And with a new stakeholder, I see a lot of room for substantial dynamism in the coming from the management, and therefore a lot of growth. It's also got a lot of cash. So I recommend strong buy also on MCX. And L&T Finance, she can sell and buy Maruti. As I said earlier, she needs to reduce the over exposure to banking and financial. And L&T Finance also not cheap. Recently, it has run up. And in terms of price to adjusted book value, it is as good, as comparable as many, solidly growing big private banks. So I would suggest sell L&T Finance and buy Maruti Suzuki. She can have exposure to automobile stock in her portfolio, which is missing at present. And finally, L&T. Definitely one can hold after seeing this 30-35% correction from the peak. It has become quite attractive stock. I believe, with the oil price moving up, oil price has already gone up by nearly 70% from the record low. And that is also positive for a company like L&T, which has got a significant business coming from the oil region.
Okay, that's the call coming in on some of the other recommendations within the mid-cap space. Let's chat Reliance Industries. MRF at 32,220 and Glenmark, what's the advice? Making good money here.
I would suggest hold on Reliance in the short term. She can try to hold it for 3 to 6 months. She should sell, the moment Reliance Jio is launched, because when they charge expenditures to profit and loss account from the telecom space, I believe there will be some pressure on the margin. But certainly in the short term, I am bullish on Reliance Industry. Therefore, she can hold. And Glenmark also is a hold. It has corrected a lot along with the entire large pharma pack due to a lot of stress coming from US FDA. After the correction, according to me, the Glenmark looks quite attractive. So therefore, she can hold. As far as MRF is concerned, in the short term, there is a concern. The rubber prices have gone up almost 60% in the couple of months. Even the oil prices have moved from bottom by about 70%. So most of the inputs for the tire industry are derived from these two sources. And therefore, there would be pressure. But then, MRF being a leader and already quoting in a single digit PE, she can hold it for long term.
Okay, that's the advice on the next set of stocks. It's a thumbs up so far. Let's move right on then to Power Grid. What do you think she should do with this investment? Sterlite Technologies has been bought at about 60.5. And finally, Midcap IT, is First Source the best bet?
Power Grid is a good company for defensive investors. It may not create a solid wealth, but certainly, considering the growth opportunity, it's going to create a stable, wealth in a small way, but in a consistent way going ahead. So therefore, she can hold it. And Sterlite Technology, I would suggest hold till you get preference shares of the demerged entity. So after that, there is a room for adjustment the price, but that lower base of Sterlite Technology price can further see another 10-15% upside. So therefore, I would suggest wait and get the preference shares, which is estimated to be worth around 22 rupees from the demerged entity, and then wait for 10-15% upside and sell the stock. First Source is a good company. I have no doubt on that, but it has run up a lot from the bottom. I would suggest switching from First Source to Polaris. Both are similar in nature, but the management of Polaris is now changed, and it's a global company, and therefore I expect the valuation multiple to improve for Polaris. And also there is a remote possibility of the Vitusa, which has taken over Polaris, can merge its two entities which are already present in India with this company. So that if that happens, that can also lead to re-rating for this company. And in terms of EV to sales, enterprise value to sales, Polaris is marginally cheaper than First Source. So for these reasons, I suggest sell First Source and buy Polaris.
Okay, that's the overall advice, and I hope that you've taken note of all the recommendations as well as target prices that have been set out by Mr. Chokkalingam. I hope, Sujata, we helped you out there. And a very important disclaimer then that this is only a model portfolio. Please do consult your individual investment advisor before taking any investment decisions. Quick break right here on the show. Stay with us. On the other side, our guests recommend their top stock ideas. Welcome back. Let's talk a little bit about the market action that we witnessed in the week gone by. And for the Nifty, what a choppy week. Expiry, big earnings, global ramifications, all of that weighed down on the index, and we ended down by 1% on the frontline indices. Ruchit, let's get in your views on what the outlook is for the markets and what is it that you're mapping on the charts now?
Yeah, overall, we still believe that market is still in a short-term uptrend. The high top, high bottom formation still continues, and we have seen that there was a trend line breakout around 7780. So now that breakout should act as a support. There is also a gap support around 7770. So we don't think that markets would go significantly lower from current levels. Overall, one should use this decline of last 2 days as a buying opportunity, and then keep a stop loss below 7700 on long positions, and we are expecting a breakout above this 8000 in next few days.
Okay, that's the word of advice coming in. So clearly eyeing that coveted 8,000 mark despite the kind of crunch we've witnessed. Let's talk about some top picks, Ruchit. What's on the radar today?
My first pick is a buy call in ONGC. We have seen that the stock has consolidated significantly in last 5 to 6 months. It was trading in a falling channel, and during last week it gave a breakout of that falling channel. The breakout has been led by good volumes, which is a sign of strength. On the high side, I think in next 2 to 3 weeks, the stock has potential to go up to 233. So around current levels, traders can look to buy the stock, keep a stop loss below 208 and target of 233. And my second call is a buy call in Amara Raja Batteries. It is a bit a medium term call. One should look to hold the stock for 2 to 3 months. Overall, the structure is quite positive. It is showing signs of resumption of the uptrend. The monthly RSI is in a bullish zone, and hence we are expecting an up move up to 1100. So quite significant up move could be seen in Amara Raja Batteries from for next 2 to 3 months. Keep a stop loss below 850 and buy for target of 1100.
Okay, thanks for walking us through your top picks. Let's also go across to Mr. Chokkalingam. And Mr. Chokkalingam, understand what it is that you have for our viewers today?
Two stocks, namely Moil and second Sasken Communications. While I believe this is the right time to go aggressive in accumulating the stock. In the last 2 months, global prices of manganese ore suddenly shot up by 35%, which was unexpected, solid rise. And even on domestic front, MOIL has increased manganese ore prices for various grades, as high as even 50% for select grades. And second, the company recently got an additional mine from the state of Madhya Pradesh. Last year or so, it has got another mine from state of Maharashtra. And already it's a monopoly. Now with the new mines, it's going to increase the output substantially in the medium to long term. And third, it's sitting on a huge cash. The cash is around a little more than 70% of the market cap. Fourth, I firmly believe that the government of India can do buyback in such companies. There's been a lot of media reports. I believe there is a strength in the media expectation. And also, the company has done IPO at around 400 rupees several years back. So this is a time to reward the shareholder. So considering all these, I believe that the time has come for the stock to perform, which has been underperforming for nearly 4 years, to outperform in the short term itself. And I also personally hold the stock. That is my disclosure. The second idea is Sasken Communications. We covered on this channel many times successfully. Again, I have picked it up because few months back, it has got a lot of cash by winning a case from a firm outside the country. And now the cash on the book is estimated to be around 350 crore, including investments in mutual fund units. And the cash is around 50% of the market cap for this software company. Now, there are many small IT companies were acquired in the recent past, like Polaris, Geometric, Emphasis. Most of these companies were acquired at around 1.5 times enterprise value to sales. Now, if you look at Sasken and net out the cash which is holding, it is available at 0.5 times enterprise value to sales. So, if there is any deal involves in terms of consolidation, then Sasken can get a substantial upgrade in terms of the valuation, rating. And therefore, I would suggest strongly Sasken for the viewers.
Okay, there you have it. Some wealth creation ideas from Mr. Chokalingam. On that note, gentlemen, lovely having you with us on the show. Thank you so much for sharing your top picks and helping our viewers out. We wind it down right here on Buy Now Sell Now Weekend. Catch you same time next week.